Welcome back. You're tuned in to Markets at Lunch right here on ET Now, and we have the heavyweight delivering its Q3 numbers. Bosch's report card is with us right now. Profits have come in at 281 versus our ET Now poll, which suggested a number of 350 crore rupees. So clearly a miss on the profits front. But yes, on the revenue as well as EBITDA and margins, it has been a beat. Revenue has come in at 702 crore rupees versus a poll of 2987 crores. EBITDA coming in at almost 448 crore rupees. Again, clearly a beat as opposed to our expectations of 410 crores. Margins have also come in way above what we had expected. Our poll suggested a margin expansion of 13.7%, but they have clearly gone way beyond that. 14.6% is what their margins for the period for the Q3 has been. Let's also go across to Mayuresh Joshi from Angel Broking. He's joining us to talk a bit about, to analyze and give his first cut reactions of Bosch's Q3 numbers. Hi Mayuresh, thanks a lot for joining in. Clearly, the numbers have been good, barring the profitability front. What do you think must have hurt their profitability this time?
So afternoon, I think a large element in terms of numbers, more or less on the top line, a little bit disappointing, but the margins have surprised on the positive, coming at 14.6 odd percent, if that's the number that I'm looking at. A large element in terms of the PAT, which was expected obviously to be lower, was because of lower other income and higher depreciation. So I think a lower PAT was expected, but the margin performance has been better than what the street was believing.
Is really driving their margins because, a lot of OEMs that we've been tracking are actually reeling under the pressure because of the rising input costs. What do you think has aided Bosch's margins so much that it actually not only came in above but actually beat the expectations with more than a percent's margin?
So for a large part of the industry, yes, I think the input cost inflation is going to probably eat into margins going into the next quarter as the pass-through probably becomes a little bit more difficult to entirely have it done. But to that extent, I think the realization in terms of the BS4 parts, I think that would have been something which could have propped up the margins. And again, I think the cost optimization efforts. However, I think the management commentary, I think in terms of implementation of BS6 norms, as they had done in the last con call, where they see a huge opportunity from the two-wheeler space, where the traditional carburetor will be replaced by the injection system, is something to be watched out for. And at the same time, I think with the BS6, specifically in terms of the PV segment, I think what probably happens in terms of investments, I think that will have some amount of pressure on margins going forward as well. So I think these aspects are something to be watched out for. But margin performance, nevertheless, I think this quarter is better than what we had expected.
Looking at the quote given by the management, and clearly technology and newer technologies and the right technologies to shape the future of the company, something that they are focusing on. And of course, electrification vision of the Indian government, they're strongly committed to that initiative and will actually work more towards the electrification. So on back of the EV space, and of course we also have the transition to BS6, what kind of a growth potential are you seeing for Bosch going forward? Can we see better margin trajectory going ahead for the company?
So on the financial front, I think, again, a 10% top line growth over the next 2 years, not ruled out, but one also has to take into account a couple of quarters back, they sold off their starter motor and generator business. So that was almost 10% of a contribution to the top line. So that hit is probably going to get accounted for in the coming few years. On the bottom line growth, on the earnings front, again, I think a 13-14% growth not ruled out. But as I said, I think with higher investments expected to come through because of the BS6 emission norms, which are expected to come through by 2020, is going to probably have some amount of effect because of the support from the parent and the royalty outgo. And at the same time, I think the opportunity that the two-wheeler space can present itself to players like Bosch, which has the technological leadership and advantage with a significant market share, is one of the few ancillary companies which can do well, specifically on the OEM part of the market. So I think earnings probably on median averages at this point of time, but I think larger investments required for BS6 rollout, along with the expected share gains from the two-wheeler segment, is something to be watched out for the company. So again, I think a 9 to 10% top line growth, a 13-14% earnings growth is something that we are probably penciling in for the stock over the next couple of years.
Well, that is Bosch earning PAT below expectations. Revenue and margins are above expectation. Thank you, Mayuresh, for sharing your opinion. And if we can show the intraday chart, a very volatile reaction post numbers, a sharp dip and then equally sharp bounce, which you can see on the intraday chart of Bosch. Let's also welcome